Well, we're back. Okay. As you can see here, this is my current trade that I was in yesterday that got taken out at 8:30 in the morning. As you can see, if you remembered from last video, and if you watched yesterday's video, I told you that the take profit was not hit here, but I did tell you that I can see in the future, in that I set my take profit up here at the negative 2.5 because I knew price was going there, which it did. Today was a little different. Let's talk about it. I don't know why that's that. Today was not a day I was expecting. I will not lie. Today was, definitely not expecting that whatsoever. Was not expecting that trade. Was not expecting today at all. And that's probably because I just wasn't ready for the news. So today at 8:15, we get ADP non-farm employment change, okay? It says if actual is greater than the forecast, that means it's good for currency. Let's read that again. If the actual is greater than forecast, it's good for currency. So this was bad for currency, right? Because it's not greater. That means it's bad. That means it's bearish for DXY, which would mean that we're bullish at 8:15. So let's look at 8:15. 8:15 comes out right here. So boom, 8:15 we get news right here. That's important because then it creates this little impulsion of price action going up, 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 up. And then this is where I'm just lost. I believe it got hit from this fair value gap here. Or it was potentially off the standard deviation. And if I do 3.5, for example, not sure why that's like that. 3.5, no, not even close. But if I draw maybe 3 to 3.5, okay, neither close. Okay. So basically, yesterday I learned that the market structure shift here was obviously created during a downtrend. This was all during Asian and London session. Okay. But the most important thing, I believe, is that it was hit by, did we say it was a 5-minute order block? What caused this? Oh, no, that was here. What caused this move up? I'm trying to find. Oh, it might have been here, wasn't it? 15-minute. Oh, God. Give me a second, guys. That's what it was. This 15-minute order block here was marked out in blue. I remember this, red. Okay. So what I wanted to talk about was, because I'm getting off track, is high time frames PD array. Okay. I'm gonna show you what my model basically teaches and what I want to teach. And what I'm interested in, if I can find the fucking shit. Jesus Christ. Path. Okay. So for a bullish setup in my case, it would be something like this. You'd have whoa, what the fuck? My bad, guys. You'd have your up, down, up, down, up, down, downtrend, right? Little downtrend. And then you might have, oh my God, dude. You might have a down that makes it down like this, okay? And then it hits I'll draw it out, but then it like takes out this high, for example. And then you draw the OT, it comes back to this. And then kind of just develops to be, I don't know how to drag it. There we go. Kind of sloppy, I know, my bad. Let me fix this a little bit, just so you guys have a better understanding. All right, so this looks like a bunch of crap, okay? But what I want to highlight is that, let's see, from here to here, there's a high time frame PD array, okay? What I want to highlight is for a bullish example. We're currently in a downtrend, okay? That can be made clear because we make a lower high, then a lower low. Lower high, lower low, lower high, lower low, lower high, lower low, and then a higher high. The market structure shift happens here. Okay. That's where it happens. We'll mark it in, yeah, that's fine. That's where the market structure shift happens. Now, this high here, that's like a perfect example to draw your OT. So what we're going to do is we're going to draw from the swing low to the swing high, which is OT here. We're going to drop this out a little bit. So then let's just make this price kind of realistic here. Boom. Something like that. And then we're going to draw our standard deviation. And price continues to rise. Now, why did this happen is because of this high time frame PD array. The moment that you, like, downtrends and uptrends happen every single day. Not a chance you will not see one, unless it's like the most consolidating day ever. But what I'm trying to explain is that you can't have some kind of random market structure shift reversal happen if this current swing low, the swing low that creates this whole move up, isn't reacting off of something big. Hence a high time frame PD array. High time frame PD array. Now, to some people, that might be like, what is a high time frame PD array? Okay, and I can explain it, right? High time frame, so high. My bad, guys, I'm back. Yeah, so high time frame, time F frame, and then PD array. Okay. Now, the first thing you should know about high time frame PD array is that it's usually determined in the weekly or the daily time frame. Okay. Now, if it's not done in the weekly or daily, it just means any time frame that is 2 time frames above your current trading time frame. Let's just do that. Does that make sense? And why is this like, why can I not like control it? Does that make sense? So if we were trading on the 5-minute, we'd look for a 30-minute PD array. Okay. Usually you want to mark out everything that's like, I don't know, on the daily. But if you look at the daily like right now, I can tell you there's not much you can you can mark out here. And let's just hide this. There's not much you can hide or mark, my bad. You can mark from this. The PD arrays on the daily are like the fair value gaps and order blocks. You're not going to mark out like a single strand of like liquidity. That's done on the 4 hours, maybe the 1 hour. The 1 hour is probably the best for that. Okay, because you can really see those swing lows. Okay. Where were we? Okay. So with that being said, this swing low has to be reacting off some kind of high time frame PD array. Whether that might be, I think of it like this: that only high time frame probability, like PD arrays are from the 15-minute, and this is like if you're day trading only. Like I do not recommend using these PD arrays if you're going swing trading or like overnight trading. 15 PD array, that's like the lowest you can go. And then anything above that is valid in my point. I might need you to know, a little more research. But from what I've noticed, 15 sometimes has probably the most order blocks, but doesn't always have the best fair value gaps. So that's when you go to higher time frames, right? And then anything under 15-minute is for entry only, right? Okay, so now that we know that and we have this model in mind, okay, let's look at what happened today, okay? Because today, okay, what we have is something, it's I can't really describe it, but let's open this first of all, and then maybe, no, we don't need this. So what do we get today? Boom. Asian highs are created, Asian lows are created. So that's a target here too. London lows are created, London highs are taken. Notice this price action. London highs are created, then almost get taken out, basically are traded in the lines. Then it comes back, comes down, takes out London lows, then goes up. 5:35, basically 6 a.m., takes out London highs. Then it comes down, 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 down. Now, I would be looking for some kind of, I would first of all look for a 15-minute PD array for a bullish market structure shift, because what I noticed is this. Let me turn this off. Is a downtrend. The problem here, though, is that look at this high. There was a high here made above this previous lower high. So then this makes it a higher high. But the problem is this isn't closing above, like if you look at this high, this Wix high, the high is 4558.3. This Wix close is 4583.7. Oh my God. This one 45, no, high, 4583.7. This close is 4583.7. Yeah. Okay, so that's what I thought. Wait, no, close, right? Yeah. So it's the same. This candle didn't close above this high. So to me, that doesn't make it a valid market structure shift. That makes it like a failed market structure shift. Whoops, why is it like that? But what would be valid is this. This would be a valid market structure shift, right? Because that broke fully above this high. Hence why we get that down move after the failed market structure shift. But what created the swing low here? That's what I want you to pay attention to. First of all, we're on the 15 minute. And what I would be looking for is, like we did over here, we looked all the way back here. Like this wasn't even related to this. We could look for something here, but I automatically don't see anything reacting to this price. So what I want to look for is either an order block or a fair value gap that's in this area. Now, what do you notice over here? Lots of distribution. Lots of distribution. That means that there's a lot of fair value gaps. I can already see 1, 2, 3, 4. 4 that I can see right now. So I'm going to go to a higher time frame, 30 minute, see if there's more. Okay, 1, 2, a tiny 3 up here. Now this one doesn't count because this one already got traded through. This came down to this. Okay, so now we know this candle at 4:30 during London comes down into this fair value gap. So I'm going to mark this out because this is still being traded through. Right, so mark that out. That's marked too. And then there's one more up here, or down here, I guess. Okay. We go to the 1 hour. Is there one in particular that we see? Yep. There is, this one. This is the major one. All right, so let me mark that one out. Boom. Mark it in gray or some shit. Maybe not in gray. Let's mark it in blue. Okay, blue look kind of weird, but that's fine. Now, in this 1 hour fair value gap, can we go higher? 2 hour? Yeah, but then that just becomes really big. 4 hour, I'm guessing. Okay, 4 hour also has a fair value gap here. So let's delete these. Because I don't want to go to the daily. You understand the daily doesn't show me anything, so the 4 hour is the closest thing I can get. Right? So out of all this, what can make price react? This, can I have my cross back? There we go. This right here. In the 4 hour, there's a 3 hour. In the 3 hour, there's a 2 hour, 1 hour, 30 minute, etc. Okay. Now we did notice that this was the appreciated fair value gap here. So that's what we're going to mark. But do remember that we are in that 4 hour fair value gap, 3 hour, 1 hour. Like there's a bunch of fair value gaps overlapping. So it's a very bullish, area. The next thing I could do, and if I don't even know like if this is true or not, but you could probably draw your OT and see if that does anything. No, but I do see something. There is a range, right, from this swing low. So let's just, where could I do it so you guys could see properly? All right, from this swing low to here. Swing high to this swing low, right? That's the current range. Now, what price does on the 30 minute is pretty clear. It doesn't react off the 30 minute of anything, but then what you can do is then you can go lower. So 15 minute now. Is there a fair value gap inside this range? Now you're looking off something off the consequent encroachment. Okay. Is there anything here? Yeah, there's a fair value gap here and under here. That's both in the area. Now this fair value gap here, as you can see, let me maybe mark it in orange. Does that do anything? Okay. This one here, price traded down into this one and got to the consequent encroachment. Understood? So then my next idea would be if price, it's coming down after this failed market structure shift. First of all, it's going to want to take out this low. But then if it traded below this consequent encroachment or at the consequent encroachment, and it wants to get bought back up, it's going to have to trade under this consequent encroachment of this range, the whole range. So that's below this 0.5. I know it's in a really bad spot, but just bear with me. That means it's going to have to trade under consequent encroachment. It has to. Okay. Now we know that this 15-minute fair value gap is most likely going to get traded through. So I'm going to delete this 30-minute, and we're going to move down to the 5-minute. Now, in this 5-minute fair value gap, is there another fair value gap that we can notice? Well, no, it just looks like a bigger candle. Let's just mark it anyways, just to see if we're right or wrong. Okay, so this fair value gap here on the 5-minute doesn't seem to be telling us much about price. It just seems like a bigger gap. What about the 3-minute? Is there anything on the 3-minute that we can notice? Just a bigger fair value gap. Okay, what about the 1-minute? I doubt there's anything, but never hurts to check. Just a bigger fair value gap. So let's go back to our trading area and notice what price does. So like I said, price to be bought back up, if there is need for a market structure shift, it would need to be in the discount area. The discount area is also under the consequent encroachment of this 15-minute fair value gap. So we're going to do this 15-minute fair value gap. Or actually, I'm marking it like this. Okay. Now, is that considered a high time frame fair value gap? Yes and no. If we're trading from the 3-minute, yeah. But at the 5-minute, it should be the 30-minute fair value gap that we're looking for. But do notice this is technically in the 30-minute. So to me, it's valid. Okay. Now, price comes down. And, you know, I was not there to watch it live, I don't think. Yeah, no, I was not. I was getting ready for school, actually. Comes down, comes down, comes down. Past consequent encroachment. And then you watch the price action. What does it do? Comes down, comes down, comes down. It doesn't actually trade down to the bottom of this fair value gap. It gets bought up. Trades down and gets bought up. But it closes above the consequent encroachment. And it made price come down into here because it's in the discount. So it was able to be bought over here. Okay, it's able to be bought. Hence why we had such a move up. Okay. Now, the real market structure shift for this, if you're looking at the current what's it called? At price right now, right? You could say, oh, but look, French trades, there's a market structure shift here that happened here on here. You could say, oh yeah, and you draw your OTE here, right? From the swing low to that swing high right here. Oh yeah, let's do that. Okay. And then what? Price comes down into the discount area of this range and then gets bought back up. But this is at 8. I can't trade the 8. So I'm going to discard that. But yes, market structure shift here. The really big one I'm looking for is this one. So at 8, I'm waiting for news, right? Because, again, we're not taking a trade here. This is just news. We get news, and it's bullish. So, boom, huge spike up here. Bullish spike. Bullish news, bullish price action. Market structure shift happens right here. Now, this, to me, at first, when I got on the charts at 8:25, I watched this live happen. I was like, I could take another trade probably, because this just broke market structure shift and it just closed. So then what I did was I drew my OT from the swing low here to that current swing high, which was up here. So I drew it there. And then price came down, came up. I'm not really worried about this price action at all. Came up, traded up, and this was the final up. And so that was the final withdrawal for my OT up here. And this turn of events here, because obviously I didn't want price to go too high because I was like, I don't want it to take off already. But this was, I was in the trade already and I already gotten out, but I was like, oh, this could hit the negative 0.4. But then I realized, is there any PD race here from the 2.5 to 3? No. Consequent encroachment. There's liquidity up here, but it's trading above that. Maybe the negative 3, is it trading here? Is there a PD array around here? No, just these highs. Fair value gap here, but just traded right through it. So anything run the 3 to 3.5, and look what we have right in the middle. A 15-minute fair value gap in the middle of that. Okay. Boom. And that's in the middle of the 3.5 to the 3. That's just liquidity. That's just like what can take us out. Right? So it hits that. And this is where I'm like kind of wrong in my analysis, because it starts dumping, which is good. I mean, to me, I saw this as a good thing because then it would come back to the OTE, right? But it started dumping fast, and I mean really fast. And it started dumping. Obviously, it gets into discount, so it starts buying up. That's fine. And then it dumps even more. And this on the 5-minute is scary. You get all this move down, and here, consolidation. I'm watching this live. Boom, it comes down. Boom. And this is the last candle I see before going to the athletics assembly. So in my brain, I'm like, oh, this is perfect. It's going to get bought back up. We're going to enter like off here. Like you could enter here if you're watching price. It gets bought all the way back up, and it's going to go. It's just going to go because we had our standard deviation marked out from the swing low to that market structure shift. And standard deviation told us that basically the first take profit is at those highs. So, you know, if you took the trade, you could have targeted here and just target those highs. Nice and simple trade because there was news or some shit. You didn't want to risk it. Boom. That would have been your trade. But it wasn't. Because I somehow made a mistake, and I don't know how to explain it. Because it came up, hit this fair value gap right here. I'll mark it in gray so you can see. Because where do we open? We open right here. Right at the where we hit that 15-minute fair value gap. Right here. We open, we dump. And this, I betcha, yeah, is a silver bullet. We got fucked by a silver bullet. Yep. 9:30 opens. It dumps. Silver bullet is created here. That's why it was gray. We come back up, hit the silver bullet, and trade even lower. Damn, bro. And we trade lower and lower. And very lower. Now, I don't know what I did wrong in my analysis, but I'm pretty sure that I obviously broke my rules of trading during news day, right? And that's pretty, I mean, I did trade yesterday, but this just shows the amount of refining I need to do in my strategy, because I just showed you how I find my strategy and how I find my edge in the market. And you can obviously see right here, right now, that it just didn't work. Right? My edge just did not work. My strategy did not work. And I don't know why. I don't know if it's because we were weak here and we were consolidating, and that 15-minute fair value gap isn't enough to hold us. It's just not. It's enough maybe your price to trade here and bounce off. And do remember, I'm pretty sure we had Asian lows down. Yeah, we did. We had Asian lows, hence why it came down here. So I don't know. Guess I didn't. Yeah, because yesterday, okay, maybe that's why I was wrong. Because yesterday, Asian highs are up here. Market short shift is here, and we entered down here. So the liquidity was already taken. And we entered like late, like 10, yeah, 12. We entered like around 12, yeah, 12:40. We entered a high like early a day, bro. But I feel like I could have played this on the reverse. Like, I feel like if I just did this opposite, I don't really know how I would have like marked it out, but high time frame PD right here hits it. Where would be the market structure shift? It would be down here. So here would be your shift, and then you're going from, so this is swing low to swing high, so you take swing high to swing low. So swing high to swing low, draw your OT, drag out your OT. Yeah, but it doesn't work. What the fuck? I mean, it draws the silver bullet, but I hope you know that we did a market structure shift down here. That was the last like lower low. And then we made a higher high. And then we would need to make a lower low, which we did here. Hence causing this as the market structure shift. Oh, not even. Not on the 15. Not on the 30. Not on the 1 hour. Wow. Okay. So never mind. You can't actually. Yep. Well, okay. Lesson learned. I'm gonna end the video here because I learned my lesson here. I blinked out. Watch your candles. Watch your wicks, and trade on different time frames. Watch every time frame. I was too focused on the 5 minute today, because to me this was a valid market structure shift, but that's for taking entries the 5 minute. So if you look at the 15 minute and every other time frame, there was no market structure shift to the downside. Hence, you couldn't take a trade down here, but the silver bullet worked. If you trade that strategy, good for you. That worked out quite well for you. Congratulations. But I'm gonna go do my research. I'm gonna do a bit more studying, for school, and I'll come back to you tomorrow. And again, this is why I'm not trading real money again, because these things happen every day, and I'm glad that I'm trading paper money and learning this along the way. This way, when it does happen real money, I'm not frustrated, and all I have to do is look in my notebook, in my notes, and say, this happened today. Here's how I can fix it. Here's what really happened. Boom. I'll see you guys in the next video.